Good morning, traders. It's the 11th of November today. We are Signal Centre Talking Bull. I'm Joe, joined by Steve and Taff. How you doing today, gents?
Morning,
Yeah,
morning.
yeah, morning. Got a bit of whiplash after yesterday's movements, mate.
What a day, hey?
Mm,
Yeah,
of
crazy.
Absolutely ridiculous. Powerful move to the upside, created off the back of this CPI print. So I guess let's get into the headlines first, reel off why the market had such a phenomenal move to the upside, certainly on the equity side of things, and anything really associated with risk. And then we can have a look and see if there's any more likely to come. So first of all, the US consumer prices increased 0.4% for October compared with the consensus forecast of 0.6% increase, with a larger than expected decline in the year-on-year rate to a 9-month low of 7.7% from 8.2%, compared with expectations of 8%. So the optimism around this is that inflation may have peaked. Maybe a bit early to call that, but obviously the markets were clinging on to that, and everybody jumped back in yesterday, it would seem. There has been a shift in the Fed funds futures following the data. There was a sharp adjustment in the Fed funds future, with markets pricing in just over an 80% chance that the Fed funds rate would increase by 50 basis points at the December meeting, compared with below 50% ahead of the data. Peak rate expectations also declined to below 5%. So the yields were on the move as a result. US Treasuries posted strong gains after the US inflation data, with the 2-year yield sliding below 4.3% from 4.6%, while the 10-year also reacted sharply to below 3.85% from 4.1%. Equities surged off the back of this. The inflation data provided strong relief to the equity markets, with sentiment boosted by the shift in Fed expectations and a sharp decline in bond yields. Optimism that inflation has peaked boosted confidence, and the US indices posted strong gains with a 7.3% move in the Nasdaq yesterday, and pretty much all of the global bourses making headway. The dollar also slumped, posting very sharp losses on the shift in rate expectations. The dollar slumped to an 8-week low, with euro US dollar above 1.02, and dollar yen slumping over 5 big figures from peak levels, with lows below 141 and the sharpest daily decline for the pair in 6 years. We did also see some relief in the cryptocurrency space. The sentiment surrounding cryptocurrencies does remain fragile, with further fears over the near collapse in FTX and withdrawal restrictions elsewhere. The surge in risk appetite did provide an element of relief, with gains across the board. This morning, we've had the UK GDP number. We saw a contraction there. It declined by 0.6% for September, worse than expected, with a decline of 0.4% anticipated. Not really done a lot today, really still focusing on the events that we saw yesterday. So not really been much move in sterling or the UK equity markets. So plenty for us to get through today. These charts are going to look quite interesting, I think. So let's run through a few of them, shall we? Who's going to do what? Steve, do you want to kick off with Bitcoin, and then Taff can run into the
Yeah,
commodities for
course.
us?
yeah, no worries. Bitcoin didn't react the way that the indice market reacted, which is a bit of a concern for Bitcoin. On the weekly chart, we're still trading below this supportive area that we had. But only just. So we've still got a few days to go. Remember, we've got Saturday and Sunday when we talk about weekly charts in Bitcoin, but still under pressure. It's rallied from the lows. So yesterday was overall a positive day. So we can't knock it too much. In terms of percentage, at one point it was up 14%, which is still quite a lot. But the fact that it hasn't really followed through leaves me a little bit concerned that, well, rightly concerned that we're still under pressure with Bitcoin. What's going on on the fundamentals of it, with everything's going on with Binance and everything else in the world. 18,168 is the resistance level. That was the two lows that we saw on the 13th of October and the 21st of September. We managed to get up close to there yesterday, but it rejected that move and moved lower. And we could see it. Let's look at the hourly chart actually, and obviously we've got this 18th of June swing low highlighted as well, which we did break above, but then stalled again. So we have got the potential inverse head and shoulders. Neckline would be something like that. So a break above there, and the upside could open up again, but we're still facing tough old resistance above there. So for me, while we're below 18,760, then I would still play this to the short side. Any others? Ripple, again, you can see this like quite nice inverse head and shoulders taking shape. But I went for this yesterday, didn't I, on the dollar? And you really have to wait for a confirmation, and got caught out a little bit by that then. So until it breaks and closes above there, it's still a potential inverse head and shoulders. So bear that in mind. And yeah, I don't think there's any others that really was thinking about covering. There's the FTT or the FTX token, looking pretty sick still.
Worthless.
Yeah, pretty worthless. It's like it gets
Worthless now.
those spirals where it just there's no, just got to let it go, son. I think Solana was like impacted as well, quite has been impacted quite heavily by everything that's going on there. Again, you see these inverse head and shoulders on multiple time frames, multiple charts, and they're the sort of levels that you have to really sort of like respect while we're in this downtrend on the cryptocurrencies. I can't see much changing really. Maybe there's some traditional assets we could get some more value from. Taff, do you want to take over with commodities?
Yes, sure. Let me just share my screen here. Yeah, let me kick it off with crude oil. Start off on the daily here. Just wait for my screen. Yeah, there you go. Yep, there you go. So crude oil, I mentioned yesterday that that we could potentially have a double top pattern here, but I also say that it will only be validated if we break this level here, I think 82.72, and then that we are approaching a support cluster, this small little support cluster here, and we didn't break yesterday. What we actually got was a candle that's showing the retardation of the bearish momentum that we saw. I spoke about this level here, how this was significant for me in terms of my bullish outlook for crude oil, and if price cannot take this out to make a lower low beneath this candles here, this bullish candle here, then my bullish outlook would still be maintained. Let's see what it looks like on an intraday level. So on an intraday level, I think price went spot on the level that I highlighted yesterday. 83, the zone is 83.98 to 84.42. Price went straight right there. It got rejection. This would have been a really good intraday trade for someone on this candle here. Let's just see, targeting probably the first resistance where price is likely going to go. This would have been what, 4.48. So this would have been a good trade on that support cluster that I highlighted yesterday. But then again, it's you're always a better trader in hindsight. But the point of the point of all these resistances and support levels is these are places where you can put your trade in, where you can hide your stops and take some off the table. Currently, we're seeing that price is facing this resistance cluster here, 8861 to 8922. This could prove to be a challenge for price to overcome. If it does overcome it, then we want to see probably like a breakout and retest of that, and then from there we'll probably target the second resistance, which is 92.68. So long term, like I said, I'm still bullish on crude oil. I'm looking for price to go longer, to go higher. Sorry. But on an intraday basis, we're facing a crucial resistance cluster. So I'd suggest traders to be careful here. We might get a bit of a correction from that side. Let's go to gold and see what happened yesterday. We had a really good bullish candle yesterday. This is on the backdrop of the dollar breaking that supports that, I think it's 107 or 109, on the backdrop of the inflation figures that came out lower than expected, which basically means traders were pricing in probably a 50 basis point hike instead of a 75 from the Fed, and that just took the dollar down. And when the dollar goes down, gold goes up, and up it did go. So we literally broke this. There was a small resistance that I put here. broke that. But what I want to just highlight here is these three bottoms here that I highlighted before. This is quite significant for medium term traders. This is significant because it shows you that the whatever we had a bearish, you can see that we had a bearish trend here, you know, bearish trend from all the way, I think from April here. We're just going lower and lower and lower and lower. And then when we came down here, we had these three bottoms. It showed you, it's quite significant. It shows you that the bulls are in it, and the bulls are willing to take it higher. And the fact that we had this NFP candle here, this was just a Maribozo candle, it's just a full candle. It shows you that there's some institutions and there's good buying here. So I mean, for long-term traders, this would be a good signal for me. This would have been a good signal. Let's see what happened yesterday on an intraday basis and what it looked like on our levels. So this was my gun to the head trade. I got dramatically stopped out. So yeah, this is on the backdrop of those CPI print, and you know, like I said, you know, the dollar went down and gold went up. So we broke, we had a small support cluster here, small resistance cluster here, 1711 to around 1714. We broke that with so much ease. We went to the first, it was resistance, but then it's now support at 1750. You can see there's a bit of movement here, a bit of retardation here. It shows you that it's probably a good intraday level. So we broke through that level, and then this candle here. Let me just expand it. Yeah. Then we had a bullish hammer candle right here. This would have been probably a good signal because it's now on support. This was resistance, and then it becomes support, and then probably to take it higher to the first resistance, which is 1780, and even further high to 1800. So that's on gold. If price does come through and breaks this support, and then on if we test this again and then on rejection, then we're likely going to go to this support cluster here, which was resistance before 1711 to 1714. So gold for me, it's still pretty bullish, but we could have a correction. If we break the first support, then probably looking to take my buys on the second support. Let's go to nat gas. Let's just see what happened on the daily. So nat gas, like the other commodities, really it responded to the US dollar and the bearish momentum we saw in the US dollar. That meant that nat gas also went higher, just like gold. And what's significant for me is that it really you know, that level that I spoke about, that 6.000. Let's see what it looks like here on an intraday. Yeah, this is a level that I drew some time back, and you can see that it was significant here, and then you can see some action here. We kind of overlapped it here, but then quickly just, you know, took back those losses, and we moved higher from that. So what I envisage here is probably we're going to see a continuation of this bullish momentum that we saw from yesterday, from this 6.0 level, probably to target this first resistance. This resistance here is the trend line from the daily. Let's just see what it looks like. Yep. So this trend line here, this medium-term trend line from the daily, that's the resistance that we're seeing on the intraday, and probably that's what we'll target for today on an intraday basis. That would be a good target zone. If however the bears come in, then they have to really overcome this support here, 6.3. When that's taken out, then we're looking at the second support, which is the 6.00. But my inclination is my bias is bullish for here, so I'll be looking to buy any dips. If price does come down to the first support, then I'll be looking to buy those dips and possibly target the first resistance, which is the medium-term trend line. All right, that's all for me on the commodities, guys. Over to you,
Thank you,
Joe.
Taff. Cheers. Okay, FX. So all about the dollar again yesterday, and we was debating whether or not there was a break in trend line yesterday. I think my lines were a little bit skew with, but Steve put me right. But I think there's no denying today that it's broken that trend line. Really major move to the downside yesterday, breaking through support at 109.53, posting a really large red candle, and on the back foot again today, down by 0.15% as prices kind of reset following yesterday's big move, but still looks as though the pressure is going to remain on the downside. So for me, and I did call it a while ago, I thought the dollar index had topped. I got mucked about a little bit, but it looks as though that has proven to be the case. We have, in my eyes, completed the top and now in corrective mode. So where price is going to head to next? Well, if we go back to the start really of this major move to the upside back in May 21, we've got a 38.2% Fibonacci retracement level at 105.13. So that would be, for me, the natural target to look for on dollar index over the short to medium term. And if it is going to play out to the downside like that, then that would indicate that we are going to see some more appetite for risk across other asset classes as well. So looks like we could be in for a period of recovery in certainly some of these riskier assets like indices and some other currencies. So let's take a look at Aussie, because that was quite interesting yesterday. I talked about it potentially forming this inverse head and shoulders bottom pattern, looked like it was going to complete that on Tuesday. Didn't manage to close above it and posted a red candle the following session. But yesterday, that major move to the upside, that breakdown in the dollar saw this complete this pattern. So it looks really nice technically. Yes, we may see a pullback to retest the newly formed support at 65.22. We do have some resistance above at 66.81, but the measured move of this bottom pattern comes in at 68.73. 68.73. So looking for higher prices there to play out in the short to medium term. If we take a look at Euro US dollar, that completed a bottom two, breaking through resistance at 100.93, powering through it. Again, we may see some sort of retracement to test that, and we do have multiple resistance levels above to consider. The first one coming in at 103.40. The measured move of this bottom for me and the break of this channel comes in up here somewhere around 106.52. And we also have a 38.2% fib level around that number at 106.10. So I'm looking for higher prices here. If we look at cable, we can see that broke out through resistance as well at 116.45. The 38.2 isn't that far away, so that may provide some resistance in the short term. I'd like to see prices accepted above this 116.45, find some support, and then maybe we can consider a higher move. But obviously we've seen a break off this downtrend as well, which has plagued the price really since February earlier this year. So that's pretty significant as well. Take a look at dollar CAD. This played out really nicely. This was the head and shoulders top pattern that we highlighted earlier in the week. Got messed around with it a little bit in the previous session, but nice follow through on that yesterday following that move down in the dollar index. We've got a 38.2% fib level at 132.24, so that looks to be a reasonable target to look for in the very short term. The measured move of the head and shoulders top comes in at 130.14, which also roughly coincides with the 50% Fibonacci retracement level around 130.00. So looking for lower prices there as well. Dollar Swiss, big breakdown, massive red candle yesterday following the completion of this double top. The target of that is at 95.34, so we're approaching that pretty fast indeed. We've got key lows down here from August coming in at 93.70, so that looks to be a potential target on the downside as well. And then finally for the majors, let's look at dollar yen. Obviously this has been one-way traffic for a considerable period of time, an exponential move higher in the price of US dollars versus Japanese yen. But yesterday we saw a big breakdown. We got some early warning signs with this, with the break of this short-term channel. But yesterday we broke down through 145.10. 5 big figures moved yesterday, and we are approaching support at 139.38. But that's a pretty significant move there, and may indicate that the rally on that is over for the time being. We do have one request, which is to look at sterling Oz. One of our viewers is short of this at the minute, so just going to take a quick look and see if we can offer some help and assistance here. So what I have on the chart here is the daily setup. I've got a major line of resistance here at 181.26, and while that continues to prevent the upside, I'm looking for lower prices here. Prices have been a little bit messy in the last few sessions, struggling for a bit of direction. The poster yesterday of this candle looks as though we tried to move to the upside, but really reversed that. I think people or traders favouring owning Aussie dollars as opposed to sterling in a risk-on environment. If we take a look at the intraday charts, then what we can see here a little clearer is a double top pattern. And that completed really on this move here when we broke down in early November. Since then, we did see a rally higher, and prices have just been consolidating, not really going anywhere fast. In terms of the double top, I'd be looking for a measured move target down at 172.40. So that would be my ultimate target for the pair. And I still think it is a case of looking to sell into rally. So if we look at this from a trading perspective, I'd probably be looking to sell into any strength, really. The top of the kind of short-term range is at around 178.21. So I'll be looking to have a stop loss maybe just above that. I think if we take out these highs here, then it might invalidate the pattern in the short term. But ultimately looking for a move down here, risk reward about 2.5 to 1 on that one. So I still would be in favour of selling rallies there. So hopefully that was useful. Any other requests, guys, for anybody?
No, I haven't seen any other requests.
Okay, perfect.
Can dive into indices.
Yes, please take a look at the indices, Steve.
I'm going to start with DAX. DAX had a huge move yesterday, especially in the couple of minutes that followed the CPI. It always concerns me when the German index is having that sort of rally on the back of a US figure, but there was, it showed a real lack of liquidity, and for that sort of like couple of minutes after, and a real sort of like heightened panic. But anyway, we've sort of like there's been warning signs on the DAX that we're putting in the bottom for well, nearly 3 weeks now. We had this close of the Monday the 24th week that was above the trend line, and then we had a hanging man candle last week, but it was still a positive candle. But again, that shows signs of maybe that this rally stalling. This week it's just absolutely roared and taking out the interim resistance at 14,000. That's the level we were talking about. Even if we sort of like break it down and show even a short-term chart, this is what was the frightening thing yesterday. This sort of spike higher, which on this chart went to 14,142. On other markets or other brokers, I saw it up to nearly 14,200. It consolidated back down to 14,000. So again, that shows you how overextended it was. But if you think just before the figure, we were trading at 13,700. For me, this is like a real has gone really overboard on that move, and I'd be a bit concerned if I was. It's just me wanting to sell it all the time, you know me. But if let's snip back to the weekly chart and really highlight where I think the next resistance is. We had the lows from multiple candles over multiple weeks, 4 or 5 different lows around about 14,825. And also we had some highs which stalled in front of these previous lows around about this 61.8% Fibonacci retracement level of the whole entire move down from this high for the week of 3rd of January this year to the lows of the year. So we're now targeting really a move back to retest this resistance. So a 61.8% resistance is a normal resistance we see in trends. So even if we got to here, I would still consider being bearish overall, because for me, until it gets above there. Now, one of my favorite indicators is Ichimoku Cloud. Let me see how that's dealing with it. And we can see, I didn't know this beforehand, but we can see how this flipped during August from bullish to really extremely bearish. And this sort of like cloud goes from like a green supportive cloud to a red resistance cloud very quickly. And that was due to this move that we saw earlier in the year, because this is a forward-looking indicator. This cloud is forward-looking. As you can see, this is showing us where the resistance will be in the future. So, but we are running into some cloud resistance here. So I do think that, yeah, overall, we're still in that bearish trend. Although we've broken the downward trend resistance, there is potential for further upside. But I think that this is going to be maybe too much. But this year-end rally that we've talked about for over the last couple of weeks seems to be on the cards now. I don't think you want to sort of stand in front of this this train. But I will continue to look for them selling opportunities in between, so don't worry about it. I'm not going to convert to the dark side. Daily chart again. Now we've got support coming in around about between the 13,350 and the 13,560. That was the previous swing high. So that was the resistance we punched through over the last few days. And as we say, short-term support coming in at 13,972, just below the 14,000 level. Nothing really much going on so far today, so plenty of time to see how that plays out. On the FTSE side of things, this has already hit the target on the inverse head and shoulders formation and has performed extremely well again yesterday, taking out the 7375 highs. Next level of resistance, we're looking at the previous swing high, 7,500, and above that, go to 7,580 before we run into the serious stuff. And again, looking at the cloud, we're above the cloud on the FTSE, shows how that's outperformed over the DAX in terms of trend. Looking at the Dow, we've highlighted this inverse head and shoulders potential as well. Let's try and clear a little bit this mess up. It looks a little bit untidy. So we've got this move from the all-time highs. Might be better on a weekly chart. Easier on a weekly chart. Let's get some fibs on here. We're at the 61.8% fib retracement level. This is the weekly chart, remember. Last time we were up at these levels, we formed a really nice reversal candle. So we've had a little bit of a similar move, this rally from the lows. We've had a more extended rally from the lows, so looking really impressive. We're above the cloud now. We weren't above the cloud last time, so it is better. And then the following week, we got this shooting star candle, which put a stop to it. For me, it's all about interest rates at the moment, and that's the concern. One CPI, decent CPI figure, I don't think is something you can hang your hat on. But as I say, don't stand in the way of this runaway train at the moment. Nasdaq, that shows how this is underperformed on a trend basis as well. And we are on the if we look at the daily chart, this is a little bit. Let's get a little bit more of a closer look at it. This is showing that same inverse head and shoulders pattern. We're trading around the neckline, so it's key for price action to hold at these elevated levels after yesterday's mammoth rally, and it really did shake everyone up. Again, for me, there's always opportunities from both sides of the coin when it comes to sort of like trading these indices on an intraday basis. So yeah, be careful. There will be resistance around here. It might be tough to break through, but go with the flow above. Very difficult to sort of like argue against it. S&P, that's marching on towards its measured move target on this inverse head and shoulders formation that we highlighted. The measured move target is above 4,000. That's the nice round number that everyone likes. We're not far away from it now. What's the high today? 3,988. So not very far to go. 4,055 is that measured move target. And then we'll have let's bring in a fib to really sort of like see exactly where that'll be. 61.8% fib is at 4,005. So they're good levels to sort of like really focus on if you're long on this and you're looking for places to take profit. These are the sort of areas that I would expect to find some resistance, maybe a slowdown, giving you the opportunity to take some profit and maybe buy the dip as this rally continues. Yeah, I think that's about it on that side of things.
Okay, thank you very much,
Nice.
Steve. Right, so let's move on now to the gun to the head challenge. So I put up a post on the stream. It looks like we have had a participant. Sanady looks like he's thrown his hat in the ring and given us a trade idea. So well done to you, sir. We'll talk through that in a minute. But just to go through what this is, every day we pick trade ideas live on the video. It's just a bit of fun. We're coming up with these ideas very quickly, and all of the ideas that we come up with must have stops and targets. Of course, risk management is of the highest importance. All the ideas are placed at market, and they're all placed to our TradingView profile. So if anybody wants to check them out, you can do so quite easily by going to signal_center on TradingView. All of these ideas expire at 9 p.m. or when the stops or the targets are hit. And we've been maintaining a spreadsheet on this for a considerable period of time, over 600 trades from both myself and Steve. Taff, pretty new to the show, but we have had obviously Jamie and Ian previously that have contributed to this. So all in all, from starting off with a hypothetical balance of £1,000, we are risking 1% per trade. And all in all, it's been a pretty good experience throughout the time that we've been doing this. So from what started out just being a bit of fun, is a pretty serious return, really. So we hope we can continue along those lines. So just a quick recap on yesterday's ideas. We had a trade idea on dollar CAD, looking for a
That was spectacular, Joe.
move low. So I was looking for a 9R return. I mean, obviously, I didn't really think we'd ever get close to that, but it was pretty decent indeed. It
That
turned out
was
to be
very
a
good, man. That was very good.
3.5R win. And if I was in that, I'd probably be still holding it. But
Yeah.
the rules of the game mean that we close out at 9 o'clock. But that is still a potential. Still potential for that to play out. Steve was the opposite direction, looking to buy dollar index, spotting an intraday potential inverse head and shoulders, which would have, of course, played out very nicely had the CPI number gone a different way, which it could have easily done. So that moved aggressively lower, but Steve had his protective stop in there to prevent any further losses. And Taff was on gold yesterday, and similar situation to Steve's idea, and that was stopped out. As well. Let's just have a quick look. Taff's guns ahead, so price is stalling around here, looking for it to fold to the downside, but big move up as we saw on Taff's analysis of gold this morning. So we've got a fresh idea from one of our followers today, from San Hadid. I don't know if anybody can replicate his idea for me on a chart.
Yeah, I'll do that. I'll do that while you talk about your two ideas. I'll put some of these up.
Lovely. Okay, so I'm going to steal another idea from one of our viewers this morning, from Mock or Moch. I don't know how we pronounce it, but she watches it from YouTube and suggested that she was looking at Sterling Oz. So I went through that, and yeah, looking at this on an intraday basis on the 4-hour charts, I can, I can understand the bearish bias there. And I'm going to back that idea today, looking for lower prices. So it's currently trading at 176.46. I'm going to target a move down to 172.40, which is the measured move I've got of this double top pattern, and I'm placing a stop at 178.30, which gives me a risk reward ratio of 2.14. So I've got that already all written up, and I'm going to get it posted to our TradingView profile right away. So hopefully that plays out for the both of us today. Taff, you got one ready?
Yep. I've got I'm going with shitcoin today. So yeah.
Can't call it that.
Yeah, yeah. So
who's gonna tell us off for that? Calling it that? Is it the owner of shitcoins going to tell us off?
Yeah, probably.
I said it again. Sorry.
Nikamutu, whatever his name is. So yeah. So for me here, I think that the catalyst really is that FTX saga, which keeps unraveling, and we keep getting more details of how this Sam Bankman-Fried guy just took money from the exchange and then took it to his hedge fund, and everything was really pretty much criminal, bordering on criminal, and he now needs about $8 billion to cover that gap. So for me, I think this is going to be another catalyst for Bitcoin, and the fact that we broke down from this 18,200, for me it just means that we're probably looking at 13 or even 10,000, I don't know, before the year ends. So what happened yesterday, for me, this was more of just a correction, and price just came up to get probably more orders here. We can see there's a trend line here, and then the bullish candle is just getting orders from that trend line. Then there's a bit of rejection. Let's see what it looks like on an intraday basis. Yeah, so on an intraday basis, yeah, we've got, this is the trend line from the daily, and then I drew another trend line here on an intraday level here. So I really I think it would be difficult for price to overcome these two. It could happen, but it's a gun to the head trade. So I'm gonna sell this, and I'll sell it at market, and I'll target my first support level, which is 1500. And I'll put my stops just slightly above these two trend lines here where they converge, and there's a resistance at 18,200. So I'll put it just slightly above that, just to be a bit safe. So yeah, so I'll sell Bitcoin at market 17,271. My profit level is at 15,005, and My stop loss is at 18,251, and I'm targeting risk to reward ratio of 2.31. So yeah, let's see what happens. If we get a good news or bad news on Bitcoin, probably we could drive down.
Nice one. Sanadid, your trade idea is up there, and it's fading gold. I'm gonna go a little bit the other way. Let me get back to my chart. This is I started building this while we were chatting, and I'm just thinking about whether we'll get follow through on this dollar sell-off. So going with the trend in this, which is pretty tight. Now, really, it's coming from this overall daily chart. This is the longer term picture, and we've broken above the neckline in this upward slope in inverse head and shoulders. We're broken above it, and I'm looking for further upside on a more medium term basis. So that's got me thinking, will we get some follow through today? And that's all I'm thinking. So looking at buying here at 21.77, targeting a move to 22.67 and a stop at 21.47. So a 3-to-1 risk reward on silver. That's what I'm doing. I'm going with it. I'm going to post that now.
Okay, thank you, Steve, and thank you, Sanadid, for taking part. I've sent over some coins to you, and as Steve mentioned, your trade idea has been published up to our profile. So thanks for putting your neck on the line and calling it how you see it. That is the aim of the game. It is just a bit of fun. No one's going to hold it against you if it goes wrong. All trade ideas are considered. So best of luck to you. Okay, what's happening for the rest of the session then? So data-wise, we've got the University of Michigan Consumer Confidence Index, which is due out at 3 o'clock today. And that's pretty much it. Obviously, markets will be dealing with the huge surge that we saw yesterday, and it'd be interesting to see if we get any sort of consolidation or whether or not the markets are going to continue roaring to the upside. I think at the moment, obviously, we are looking pretty strong. Not sure we're going to get another 7% day, but who knows. Next week, we've got UK consumer prices on the 16th and also US retail sales on the same day. So, yeah, be interesting to see what's going on with inflation in the UK. If we maybe see a bit of a peak there emerging, then that could further stimulate markets and we could see more upside next week. So, all in all, been a very good week for markets, and let's see what next week brings. Hope everybody's had a great week and done well, and we will be back on Monday.
Yeah, cheers, everyone.
Take care. Bye-bye.